Hello everyone and welcome back to another video. In today's video, we'll be discussing everything to do with the markets around the world right now, including the increased volatility that we've started to see and whether this bodes well for your trades, scalps, and investments over the next couple of months. Articles are now being written about the next 100% or 97% gain. And is that really the place that we believe we're in right now? There's a lot to unpack here, guys, and we've got some great data that I think will help you in the future. Stay tuned. All right, guys, well, here begins our market recap for the markets that were closed 23rd of August, 2021. And straight away, when you're having a look at this heat map of the markets, you'll notice a few things. Green across technology, and of course, my favorite sector, biotech, came back yesterday in a big way. We had NVAX going strong, Beam, Edit. It really didn't matter which one of those types of stocks you were in. You were getting about a 6 to 7% day. It was insane. Let's have a look here at Nvidia, 5.4%. We'll be deep diving into that in today's video. Got Tesla. People were very happy about that one. 3.83% up, and of course through the 700 zone, which is excellent. And then we've got Google, Apple, Microsoft having a chill after getting past all-time highs. So is this good for the market? Well, of course, it looks great on the surface. We've got new all-time highs. Just a few days ago, we were pushing those 50 exponential moving averages. We all know that's the key for the bears to get control, and they were fully rejected. But is it something like a blow off top that's potentially coming? I still think it's a time to be trading, absolutely following the price action. If you're holding investments, hey, I'm very optimistic on the future of the stock market. I've let you guys know that several times. I think that we're in a multi-year bull run here. However, that doesn't mean that we can't be paying some attention to how these markets have reacted in the past. So we had the IWM coming in with a 1.9% regain. That is the Russell 2000, the smaller cap businesses, with the Nasdaq coming in strong, 1.35%, S&P 500, 0.8%, and the Dow Jones only getting a 0.6%. A bit disappointing there considering energy was up so much. We've got energy here, 3.75%. IBB, as we mentioned before, the biotech sector doing really well. We also had the semiconductor sector doing great. And usually when you have a good green day, you actually want to see a reduction in a few sectors, speaking of utilities and XLP. So this is Wall Street dumping out of their defensives they bought recently and packing into some of the other stock market sectors. When we have a look at earnings this week, as we were aware, we're getting into the back end of earnings, but if you're in any of these stocks, please be aware that they will act, of course, based on the earnings more than anything else. We've got some notable Snowflake, Salesforce, and a few other large names coming in this week. So without further ado, let's get into this technical analysis, and there's so much to go through today. As I said, we'll be doing stocks, commodities, crypto, everything else. There's some great stuff here. So we'll start with the dollar index, and a lot of people, of course, have been getting bullish on this, and I don't blame them. We've got this red box that we drew up with the community in the pre-market yesterday, and there's a reason we have this red box set. It's set for the bottom end being this trend line that we've seen consistently be buying for the dollar index. And it's also set because we saw an incredible drop off in the DXY. So if you have a falling knife, I don't like to just buy, especially with something like the DXY, where it has no real fair value over a long time. And you want to make sure that you get an accumulation base. Now, for traders out there, what does that mean? Well, it means that you're looking for things like the patented lightning bolt we talk about all the time, a change of trend on the smaller time frames off a key level of support. We want things like a double bottom off a key level of support. All of these types of signals show us that the market is ready to go bullish again. We might have a bias based on the weekly analysis, and we can see here on the weekly, we did get a close here high, and it looks really great. But when it pulls back very quickly like this, you want to be paying attention and making sure that you're picking good accumulation. If you just buy the role reversal, which was over here, you can really get hurt doing that over the time. So I guess that's something I would let people know when it comes to trading in the markets. Great pair to trade or great pair to look at and study, but at the same time, you need that movement across. Now, on the flip side, we had some really great movements coming out of commodities. So first off, we'll start with gold. And gold closed above that 1795 area that we've been looking at. Now, this now exposes 1830 in the participation zone. So this is the next level that we expect gold to be able to get to. Now, there are a few caveats here. Number one, if the dollar index starts to bounce, of course, it's going to put some downward pressure on gold because it's gold versus the US dollar. This looks like a flag. It's a very nice type of pattern. We do have some strength coming through here. We have a good daily close. I wouldn't mind it to come down a little bit here, hit around this 1790 zone, find a little lightning bolt in the small time frame. That could certainly provide some good opportunities here for day traders to be looking at. So this will be a key zone of role reversal, and it's already a zone where I think some people will have scaled into gold based on these closures. I mean, we look here and we look at the daily. We've got long leg doji indecision, long leg doji, no close below, no close below, and then a bullish close above. That's the type of thing that you look for to show you that gold is ready to move to the next level. So it's some good TA here. Nothing is, of course, 100%. It's all statistics and bringing in the best areas that you can find. But at this stage, it certainly does look good. I wouldn't mind for it again. Come down, find a bounce, look for the bounce on the smaller time frames to give yourself a little bit more confidence that the thing's going to work out, and then take it up to the next level from a technical standpoint. Move over to US oil. So hit our first target last week. Great shorting trade here. It's come straight back up to the 65, and we did caution people through the weekend video and the pre-market that this is a zone that we need to wait and see how it reacts to it. So it is role reversal, which means that we've got support becomes resistance, but we don't just sell at this type of zone. It's just like the falling knife. When something's going ballistic on the way up, you do not just instantly sell that kind of zone. What you need to wait for is, again, a change of trend. Change of trend in these scenarios is the key thing that a lot of experienced traders will do. So change of trend here, looking for US oil. If it does continue to hover at this level here, let's say it consolidates, then a consolidation breakout could be a good trade to 68. We don't have any bias here on oil. Again, it's one of those commodities that you might believe in 10 years' time it's going to be up or down. It doesn't really matter. All you're looking for is what's going to happen over the next week or the next couple of days or even the next couple of hours. So just remember, your bias towards long term means nothing when you're trading, and that's why we can go either way here on oil and we don't really care. Big news coming out about it, but at the same time, I don't care about the news here. I just care about what the technicals are telling us. And at this stage, they are mostly bullish, being broken through this level, but they're at that zone where I neutralize it. So basically, we've got neutralized oil. We're waiting for a closure below here again, signaling we can short, or a closure above here after some consolidation, signaling that we can long or buy that particular commodity. Let's move over to the stocks now, where a lot of people want to be. Congratulations, Tesla guys. You got above the little long leg doji. You saw that rally come through. It hit past 700 and it got to 706. So from a technical perspective, is this a big deal? Well, let's have a look at all of the different time frames here. So the weekly, the trend line is held up. That's good. The weekly also looking fine at this stage, but it's still very early. We go into the 4-hour chart. Again, broke through. Key thing. Wouldn't mind it just to pull back down here and then find a technical buy through the next session, which will be around that 697 area. Previous resistance, previous resistances. You would love to see the buy off there. Just gives you that extra confidence there are real buyers here. And 727 becomes the next resistance zone for Tesla. Now, if you get through this area, Elon Musk might be starting to tweet and getting excited, because at that point you move to the next rotation, and that would be 750 into 780. And I really like that 780 level if it does occur. Very nice stuff here from Tesla. But let's go a little bit deeper together as a community. So yesterday, or in the last couple of sessions, I've been talking about the fact that there's a lot of calls on Tesla. Obviously, it's a retail favorite. Here are the call strikes that are the most popular right now. And 680 certainly got eaten up in the last 24 hours. I mean, in terms of 680 had like 11 million calls open on it. Now, all of a sudden, all the strikes have moved to 690, 700, 710, 720. You can see the numbers coming in. Some strong numbers here. And if that continues to strengthen, it might be like AMD, it might be like Moderna recently. If everyone's hyped in here, this is a social experiment really, and you need to go through your stock tweets, through your Wall Street bets, through your hype equities, all of these types of things, and make sure that the retail herd is buying calls out of control so that Wall Street let it through to the keeper and it keeps going up. We don't want another experiment like last week, where it closes underneath the strikes. Now that it's through 700, it's important everyone is getting in on it so it continues to push. Another thing you want to look at is whether the algorithms are coming along for the ride. So in this case, the algorithms you'll notice are coming through the ride. And this is available to private members. If you're interested in becoming a private member, you can just go down into the description below, by the way. Free 7-day trial. Come in, check it out, see if you like this stuff. So this is the AI bot that's in there. And you'll notice it shows you the algo flow in real time versus the stock price. And what's important is the algo flow must be coming with the stock price. If you see algo flow going backwards and the stock price is hovering, that could mean Wall Street is getting out of it and leaving the bag to be held by the retail traders. Good news for Tesla, everybody was buying it. So that's excellent stuff, and it bodes well for the stock. Another one, Nvidia. I've been asked to bring this in because you guys are getting hyped about it. Great trade here. Statistically, I think it's the best month statistically to own Nvidia is usually August over the last 10 years. So excellent stuff here from Nvidia, coming through very strong. Long leg doji closed above, ended up going all the distance here to 220. That was initially my target. It just got underneath it, but you'll notice, look how close that thing was. In fact, the high was 219.97. So for me, that's enough. I like that kind of 80 a level I bail out. Beautiful movement, 5.49%. Is there more distance in this? Well, I think there's a lot of arguments that can be made both ways here on Nvidia. It's a strong looking pattern. I wouldn't mind for it to come back down and hit this level and find buying support again, because I think 220 was the first target here. But a lot of you will have bigger targets. It's been rallying now for 3 strong days. Usually that means it has a bit of a breather after that time. But let's have a look at the algo flow. Good news from the algo flow. The algos were with everybody yesterday. That's excellent stuff. Also, the flow heat map of options. Now, this is where things get a little bit strange. It's a similar situation to Tesla. As long as the hype's real, as long as the retail traders continue to stack in, that will be fine. But have a look at this week expiry. There are some monster orders here. 15.13 million strikes at 215. 220, 10.38 million. It is going to be tough to get through these zones. If that zone gets cracked, then it probably continues that momentum because Wall Street's let it through to the keeper. But this will be where the big guys do not want this thing to expire come Friday. They want this thing. Bring it back. They say, bring it back, guys. Bring it back. We need the money for the piccolos next week. We've got to be, we don't want to be bankrupt. So they need to bring that thing back under 215 in their ideal situation so they can make all the cash coming out of here. Another interesting thing to note is that later on in the year, look at these puts that have been started to load up. So we'll continue to watch this thing as it evolves. I think you really want to watch the options flow this week and the algo flow more importantly. And that's why you probably should subscribe if you like this content, and we'll be covering it. I'll cover Nvidia for the entirety of the week because this will be a great study for everyone to check out. Let's move over to the indices. I told you it'd be a long one, but we're through the indices now. US 100 Nasdaq, wowzers, look at this. Woo, it went through. 50 exponential moving average on the daily was too much for it. The SPY was the one that it could not break through. Unfortunately, the bears did not win now, but I will say this. If we continue to rally out of control, let's say we get another 2% day, another 1.5% day, something like that. We hit these trend lines quick. Be careful, guys, because that is traditional with a blow off, okay? So as I said, I'm still just looking at trades here. I don't think the best value in the market. Some stocks are okay, but like the biotech industry, I still think's cheap. But it's all specific to certain sectors. We've broken through. We got good trades yesterday in the live session. We were talking about this 15,180, 15,002 being closed above. It did. And then look at this. It rallied and rallied and rallied, and it was all glorious for everyone that was day trading this one. Hopefully a few people took, I reckon taking profit at the end of the day wouldn't be bad for a trade here, but totally up to you guys. We saw it. You can see the line we put in. Why we put that line in is because we were looking at it basically weakening through the fake market futures, and then the market came out and just ripped. Every single day, every single minute was basically chunking to a new high. So great stuff. I wouldn't be surprised to see a little bit of weakness now over the rest of this week for us to come back down, test this from the top down, and this to be where those bulls and bears fight it out again. If it keeps rallying, that's excellent, but I would take it day by day by day. I think that's the way to look at this thing. The other thing that was interesting is the algo flow actually wasn't great for the QQQ, that is the Nasdaq yesterday. Overall, it was mostly negative, which could show that Wall Street is actually selling into the retail herd. They're positioning through. We also saw an increased amount of puts being opened yesterday. Is that actually retail opening puts on the QQQ, or is it Wall Street starting there, ramping into those positions? These are some conundrums that we'll have to look at. I always go follow the price action. That's the key. QQQ, same thing. Here's our trend line that we've got. The first one, then we've got that bigger one that's up above. Keep watching these zones. It might be worth having on your chart. We'll move over to the S&P 500. S&P 500, very, very strong stuff. Moved to an all-time high, then quickly came back just near the close. Closed basically right at that 4480 zone. Nothing much to report here other than it was strong buying, very similar to the Nasdaq, but the Nasdaq was the stellar one yesterday along with IWM. IWM, we take a look at this one. This is the Russell 2000. Is there anything to take out of this chart? I'd say in the middle of the range. Very tough trading here. Really, I believe you trade it more off the US 10-year, or whether you think the SPY or the S&P 500 is going to recover. Then if you do, maybe there's some bigger gains to be had here. Key levels to be watching in the future for IWM will be around this 225. We'll certainly be checking that out for the streams and of course for the daily videos. And then we'll move over to the final one here, which is Bitcoin. So Bitcoin doing really well. It's been an exceptional trade. Congratulations to people who have been in Bitcoin recently. We've been following this big rally. We've been very bullish on Bitcoin ever really since we got past that 36.5. Things really started to turn good. And yeah, it's been great trades here on Ethereum, Cardano, Bitcoin. Is it time for it to have a breather yet? Well, daily 20 will be where the bulls and the bears truly fight it out. So if it does pull back, daily 20, 1, 2 pickups so far. New peak as well, so there's no problem with it coming back down to this level. So that's the 1, that's the 2. Will we have the 3 pickup? But I think it looks pretty good. This is kind of similar to 17 in some ways. You had that weakness over the summer period in the US, and then all of a sudden it ramped into the end of the year in 17 and went crazy in November and October and into the December period. So will we have the same thing? You're looking for a 51,500 break for it to really get ramped up. The next participation phase would be around 60K for Bitcoin. So keep watching this one. It is the most important coin still. I know Ethereum's coming up. I know Cardano's coming up, but this is still the biggest one that proves the sentiment either way. If Bitcoin falls, generally the rest will fall with it. It's like the SPY in that kind of way. Thanks so much, guys. If you enjoyed this video, please remember to subscribe. Hit that like button if you also enjoy the content, and come and join us 1 hour before the New York Open, because there's a lot to go through. And if you enjoy also all these options and algo talk and all these new things I'm bringing into the videos, please comment down below saying if you do enjoy it or you don't, and then I'll know that you guys want it in the videos. Thanks so much, guys. Bye for now.